Hello and welcome to this presentation. My name is Simone. I'm an accountant and a financial analyst, and today I will explain the double entry accounting system. This presentation is divided into two parts. In the first part, I explain what is the double entry accounting system, why almost all businesses use this bookkeeping system, and how is working the double entry accounting system. Instead, in the second part, I'm going through a practical example and I explain how to analyze a business transaction, how to select the GL codes inside the chart of accounts, and how to record the journal inside the system. I would remember that the material related to this presentation, along with other materials for accountancy, are inside my website vatradi.com. I would also remember to subscribe. The subscription is quick, is free, is important for you that you are notified when the next video will be available. Is also an indication for YouTube, which can use this video for others looking for the same argument. So many thanks in advance if you subscribe, and we can start now. I start by saying that inside a company every day there are a lot of business transactions because a company purchases material, a company sells product, a company pay employees. So business transactions must be recorded in a system to maintain control over the company's financial position and to comply with the tax requirements. So all the business transactions must be recorded inside the software in order to have control of the performance of the company, its financial and also liquidity situation, and in order also to calculate the taxes. And for this reason, every day, an accountant records the business transaction inside the software by using the double entry accounting system. So what is double entry accounting system? Double entry accounting system is a bookkeeping system where every financial transaction is recorded twice, one in debit and one in credit. And this is one of the most important points when I explain the double entry accounting system, because every transaction has two sides, one in debit and one in credit. And why everyone are using the double entry accounting system? Because first, because it's accurate and it offers transparency in financial records, because it helps to identify error quickly and to maintain the books in balance, and also because it supports the preparation of budgets and also for strategic decision. So how is working the double entry accounting system? The double entry accounting system is designed to preserve the following equation: assets equal liabilities plus equity. This is the foundation of the double entry accounting system. And what does it mean? That the total value of a company's assets must equal the sum of its liabilities and equity. The other point that I already explained is that the recording is made by debits and credits. Every transaction has two sides, one in debit and one in credit, and the total in debits must equal the total in credits. So it's not important how many GL codes you are using in debit and how many GL codes you are using in credit. You can use many GL codes in debit and only one in credit, or only one in debit and more in credits. What is important is that the total debits must equal the total credit. Not only, in order to guarantee the famous equation asset equals liability plus equity, the transaction must follow the indication from the double entry accounting system. So an amount must be recorded in debit when the accountant must increase assets or expenses and decrease liability or equity. An amount must be recorded in credits when the accountant must increase liabilities, equity or revenue and decrease assets or expenses. And I'm going now through the practical example to show what I prepare for this presentation. I remember to subscribe to my channel, and also if you have comments or questions, please leave below in the description. This is the example that I prepare for today, and we have that Vatradi purchase material from company B for 1000 euro. Vatradi pay 80 euro in cash and agree to a 30-day payment term for the remaining amount. So usually this business transaction arrive with an invoice. So if Vatradi purchase a material, Vatradi receive an invoice from company B, where inside there is the date of the invoice that I use for my transactions, and there are also the payment terms. If I analyze these business events, I can say that I need a GL code for the cost. I need a GL code in order to record the payment by cash, and I need a GL code for the payment term. So I need to go inside my chart of accounts to select the right GL codes. And this is the chart of accounts that I use for this presentation and also for the others. And I leave you the link of the 2 videos that I prepare where I explain what is a chart of accounts and how is structured a chart of accounts. A chart of accounts is a structured list of GL code that are used in order to record transactions inside the software. And the chart of account is structured in order to mirror the 2 important documents inside the financial statement, the balance sheet and the income expenditure. And for this reason, almost all chart of accounts start with the number 1 that identifies the GL code that are going through the asset, the number 2 that are the GL code that are going through the liabilities, the number 3 the GL code that are going through the capital, the number 4 are the GL code for the income, the number 5 are the GL code for the expense. And as I explained previously, I used to insert beside every GL code in the chart of account plus and minus following the double entry accounting principle. This makes easy the recording, in particular for those that are at the beginning and are still not more comfortable. For example, based on the double entry accounting system, I increase the cost in debit and reduce in credit. And I'm doing the opposite, for example, for the income. When I increase the income, I'm going in credit. When I reduce, I'm going in debit. In this situation, I need to record a purchase invoice and I use a cost, the GL code 5010 material. Based on double entry accounting system, every time I increase in cost, I put the amount in debit. When I reduce, I put the amount in credit. The other GL code that I use for this example is the account payable, which is a liability, increase in credit, reduce in debit. The account payable is a common GL code that an accountant uses to record all the money that will be paid in the future and not immediately. The other GL code is the cash, which is an asset that reduces in credit. So now I have my GL code ready to prepare my journal. This is the journal that I prepare. I use the date of the invoice, I use the free GL code, I insert a briefly description, and I insert the amount in debit and the amount in credit. In this situation, I have a cost for 1000 for material. I use account payable for 920 and I use cash out for 80. After 1 month, I pay the remaining and I use the bank. So I have the bank in credit and I have account payable in debit. And as you can see, the account payable has completed its job because it was in credit the 20th of July when I record the invoice and is in debit the 20th of August when I pay the remaining. So this is my example to explain how an accountant records a transactions inside the system by using the double entry accounting system. If you have any comments, please leave below and remember to subscribe. So many thanks for watching this presentation and we see you to the next video.